Hi guys, so I just decided I wanted to make a very quick recording to take you guys to some of the things that I think about when I'm trading, okay? Because last week I gave you guys um, my target for the week, and I just want to, I've said it in a few videos, but I want to emphasize on how important it is to be able to separate to know when to trade and when not to trade. Okay, so this is just going to be a very quick, very quick video. So let's just look at a few things. So we are on the daily time frame, right? Last week, I told you guys that I was expecting the markets to get to this sell side liquidity. This is last week's candle. It did hit it exactly as I said it was going to, right? Now, here's the thing. Anytime you have a drawn liquidity, which for me was the weekly time frame, once it hits the weekly sell side liquidity, once it hits the weekly sell side, you need to be patient. You see, the market is drawing down like this, but the fact that it's drawing down like this does not mean that it's going to forever keep dropping. No, the market goes in cycles, so it's going to have a time of expansion, it's going to have a time of retracement. When do you know when the market is likely to retrace? When is the most likely time the market is going to retrace? Once the market hits a point of liquidity, especially on the higher time frame. So you look at something like this, the market hits this particular level. You have to be patient. So I've not traded this week because I'm waiting to see what the market wants to do. All right. If I look on the daily time frame alone, one of the things I can see is that the market could potentially come back up here before it drops down. So today it's Wednesday, right? So this particular candle was Friday's candle. So Monday I didn't trade, Tuesday I didn't trade, Wednesday I haven't traded. I am still waiting to see what the market wants to do. If I'm going to trade bullish, now hear me out. I know some of you are more aggressive traders, and to each his own, okay? I will not trade that way because I am more concerned about my money. So if I wanted to be bullish, I would need to wait for, first of all, the market to go up here, come down here, show me a clear sign of failure to push below this point. So maybe somewhere here, and then it keeps going up here. Once I see it starting to make a break around this point, that is when I'll begin to take bullish trades. Until then, I remain bearish. Do you understand? So until then, I will most likely remain bearish on the daily. I want to see this happen either on the daily or on the 4-hour. And I'll show you an example of it because I saw an example of what I just said, what I just showed you. I saw an example of it happening on the 4-hour. So that might make me more inclined to take a 4-hour trade, right? So I should see this either on the daily or the 4-hour. Now, if I want to be bearish, I will still be waiting for something to happen. Right now, the market is retracing. I would want to see the markets go up, not necessarily specific to this particular level, but around this area. I would like to see it make a clear rejection and start to push down. Once I see it starting to push down, that is when I'm going to trade. So in the market forming its movements from this place to this side, and before it gives me the confirmation of it moving down, I have no business trading. It's that simple. All right? It's that simple. You don't have to trade every day. Day trading is not everyday trading. All right? So let's go to the 4-hour just so I can show you this, and then I'll leave you off with this. This is a very short video, as you can see. So you look at this 4-hour chart. On the daily, you saw what is happening, but on the 4-hour, what you can see is, interestingly, you can see how the market was making very clear bearish movements. It comes up here, it drops down, fails to close below this. But what I like here is that it made an equal low. Actually, just took it out. So liquidity was taken over here. We've made a clear rejection of this. All right, made a clear rejection of this. Now price is pushing back up. What is going to make me want to trade is if I see price probably drop around here and start to push up again on the 4-hour. That is when I'm most likely to trade. If that doesn't happen, then I'm still continuing with my bearish analysis. But I like what's happening on the 4-hour. This looks like an early sign of a reversal. But even if I started to trade the 4-hour, you see, and that's where multi-time frame analysis comes into play. Because even if I start to trade a 4-hour, right, I'll be looking to see what's happening on the daily. Because look, let me go here and give an example. Say I take a trade, all right, say price comes here, I move down to the 5 minutes, I get an entry point around here, my stop loss is maybe somewhere around here, right? Let's see, my stop loss somewhere around here. I'm just giving, like, if price should come like this, all right, and then hit and start going up. I'm just using this to give you an example. I would, let me make sure this is visible on the daily as well, because I want to use this to show you something. If this is visible on the daily, right, I'm going to be looking to do something like this. So I would definitely be trading, if I get a very good entry, I'll definitely be trading not above this particular level. You see, I will not want to trade above this particular level, because I know that once I hit this particular level, price could react anywhere here and start pushing down again. On the daily charts, this is where multi-time frame analysis comes in. And I'll give you a hint. I like to pair these levels with correlated pairs. So as if I'm looking at price not going above me not holding price bullish. Okay, this is bullish because I'm going counter trend here if I'm using the 4-hour chart. All right, so if price gives me a very nice signal, and let me tell you something like this, I want to see very clear confirmation. So 4 hours is showing me that I want to be bullish. I want to see the same movement on the 15 and the same movement on the 5 before I actually take a trade, and the same movement on the 1 hour. So I want to see these 3 or 4 time frames showing me like something similar, that there's a reversal incoming. I don't want to see any rejections. I want to see it showing me clear signs that the reversal is incoming. Then I'll probably take a trade. If not, I'll be on the sidelines. All right, patience is key here. So I'll be waiting to see if price is going to probably go up. If it pushes, I want to see it enter into this level right here, not to cross this particular top of this candle, and I'll be out. If it's a 1:1, fine. If it's a 1:2, fine. But that's what I'm holding it out for. Another thing I'll probably be looking at as well is this particular level. I want to see, because this is GBP USD, correlated pairs. I want to see how price is going to react as this is coming up here. Because mind you, these are two pairs that they move together. So if I start to see a crack in correlation, or if I start to see GBP USD not moving the same way Euro USD is moving, I would enter with caution, or I would trade with caution. That's where I'll begin to manage my stop losses much tighter and things like that. All right. Anyways, so I just wanted to share this very quickly with you guys. This is just an 8-minute video, just to get you guys to understand something on the chat. And thank you guys so much. I'll see you guys.